Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I am going to take a look at the energy sector, and in this case we're looking at USO potentially having a double bottom, but there's actually a much more interesting trade to take advantage of this potential bottom, and so that's going to be the topic of this video. But before I get to that, I want to make sure that if you are not already a member of Market Gauge's YouTube channel, please subscribe here, and also want to make sure you know that you can get this video in HD by changing a setting in the lower right hand corner. And if you have a Twitter account, make sure you follow us on Twitter at Market Gauge or at Market Minute, or both. So with that, let's get into the trade opportunity here. So as you can see, we're looking at USO, the ETF for oil, and it's right back to where it exploded higher at the end of August. All right. Now it's also consolidated rather nicely at that level. Now from a double bottom perspective, it would be more compelling if it took out the low. So it hasn't really tested that low, but it seems like it's trying to make its way higher here. And if it does start to make its way higher, I think there's actually a better way to trade this. And in fact, the better way to trade it may even mean getting involved right now, because even if the oil itself makes a new low, the ETF of XLE or OIH, which are the stocks, looks much more poised to take off. So as you can see, we're now looking at XLE. The moving averages that are on my chart here are the 200 in gray, the 100 in blue, and the 50 in magenta. And so XLE by itself, or OIH, we'll look at that in a second, looks like a very compelling bottoming pattern. So the bottoming pattern would be to see that this inflection point has started here, broke down, became resistance, somewhat of a double bottom. Again, not a perfect one because it didn't take out the lows, but a good looking double bottom. It rallies strongly, takes out that resistance level, and then that becomes support. And not only that, as you can see, it all lines up really nicely with the 50-period moving average. So by itself, this would be a very compelling looking chart here. It's even more compelling when you look at it in the context of the potential that the crude oil itself could be bottoming. So even if crude oil takes out its low, breaks down, this thing looks like it's ready to hold, and that gives you a little extra cushion potentially on playing a bounce in the energy sector. Now, before I go and get into the details, let's just take a quick look at OIH. You could really play either one of these at this point. I don't really have a favorite. So really take your pick. So I'm going to focus. Let's focus on OIH. The key points are really the same. After today's close, from a day trading perspective, or from a more active swing trading perspective, if you want to cut your risk really tight, this is the area I would look for support. These highs in here, if it pulls back tomorrow or in the next coming days, and wherever the floor trader pivot ends up being on this day. So the first level it really shouldn't take out if it pulls back is going to be the low of today. So a tight stop, a really tight stop, would be a little bit of distance underneath today's low. So that would be a really tight stop, considering the fact that if this thing pushes to the upside, the 200-day and certainly this area is a logical first target, and that's about twice or more what you'd be risking if you risk this particular day. The big picture, though, is that it really shouldn't take out these lows here. So if crude doesn't start to bounce, and the whole weight of the downtrend and the basing process pulls this back into below yesterday's or today's low, I should say, it doesn't mean that the opportunity here is over. So I would trade this thing from the long side against this level as well. Now, if you've got a really longer term perspective, you don't really want to watch from day to day, you could just position size so that your risk is down here under this particular low level. The key levels to watch out for resistance really are going to be today's high, because you can see that lines up with this area right in here, as well as this area and ultimately here. But today is really the day. I wish I had had the opportunity to point it out as the market was weak today. This was holding up. That was another indication that today was the day. But from a swing perspective, you can see that the market. This is the first time the market has broken through this 100 period moving average and then followed through. So it did it there, but it never followed through. It came back down, held where you'd expect it to hold, broke it here, pulled back, doesn't break to a new low, and now today is breaking above that level. So especially if we can get a close, I hope you can see from the way that I've drawn this here, this is a significant trend change today, and that's why I say tomorrow, the next day, is the time to really be looking at this thing, especially if you can get a pullback, as I said, to reduce your risk into the floor trader pivot and these high levels in there. All right, now this actually could shape up to be one of the better looking trades going into the end of the year as well. So this is not just for tomorrow. Keep an eye on this for the coming weeks. Hope that helps, and I'll see you in the next video.